Hey everyone, welcome back to Corporate Decoder. Today we're diving into the Tema ETF Trust's annual shareholder report, which, if you're not careful, can be about as exciting as watching paint dry. But don't worry, we'll extract the nuggets worth knowing. And this report is a mixed bag. Some funds are soaring, others are lagging, all while they switched out their investment advisor. We will dig into what this report means. Before we begin, if you find value in deciphering corporate documents, be sure to subscribe. Also, our Discord community link is in the description, so join us there for more insights. This report covers the financial year ending in February of 2025. It gives a snapshot of how the various Tema ETFs performed, what they invested in, and any major changes that occurred. Think of it like an annual checkup for your investment. Let's start with fund cost. This table shows what it would cost you if you invested $10,000 in each of their ETFs. We can see that the Tema American Reshoring ETF would cost you $78. Alice is something people should pay attention to. It will impact your gains. It's important to know how expense ratios work. Now let's look at the returns of the funds in question. The Tema American Reshoring ETF, or RSHO, delivered a MDEF total return of 730,500, far outperformed it at 1841%. We must remember that past performance doesn't equal to future performance. If you want to track more up-to-date performance info, you can visit their website. Checking out key statistics, the fund RSHO has over 21.7 million in net assets. It seems like a healthy fund. What was the fund investing in? Looking at the top 10 holdings, we see Rockwell Automation, Timken Co., Applied Industrial Technologies, mostly well-known industrials that might benefit from a trend of American companies bringing production back home. It is important to note here that industrials make up 74.2% of the assets. Now let's talk about changes. Their investment advisor changed from Tema Global Limited to Tema ETFs LLC at the end of December. This might be a restructuring move. Let's move on to the other ETF. The next ETF is Volt, or the Tema Electrification ETF. This fund is new since it launched in December of 2024, so the numbers presented in the report are a little bit limited. A $10,000 investment here would only cost you $17 a year, but remember that expenses would be higher if the fund was operating for a full year. Since its launch, the fund had a NAV total return of negative 11.56% versus the S&P 500, which returned negative 1.27%. Let's check what it holds. It has over $55 million in net assets. The top holdings include NextEra Energy, GE Vernova, and Itron. The ETF is focused on the electrification trend with high exposure to industrial 43.30 and utilities 43.4% and utilities 41%, and let's check the next fund. Next we have the Tema GLP-1 Obesity and Cardiometabolic ETF, which we will call HRTs. It costs $72 to have 10,000 invested in the fund. Over the past year, it returned negative 720% versus the S&P 500's 18.41%. It appears the ETF had a rough year. Checking out the key statistics, we can see it has over 64 million in net assets. The top 10 holdings include Eli Lilly, United Health, and Novo Nordisk. The fund's strategy focuses on the obesity and cardiometabolic, them with around 99.4% in the healthcare sector. Similarly to the previous funds, it changed investment advisors in December of 2024. There was also a name change from Tema Obesity and Cardiometabolic ETF in July. Next, the Tema Luxury ETF, called LUZ, did not perform well either, with a NAV total return of negative 4.51%. A $10,000 investment would cost you $73 a year. It seems to be a much smaller fund than the others, only having around 2.8 million in net assets. Its top holdings are CF Financier, Richemont Hermes International, and First American Treasury Obligations Fund. It seems to be concentrated in consumer discretionary and consumer staples companies. This fund also switched investment advisors at the end of December. Next up is the Tema Monopolies and Oligopolies ETF, ticker TOL. This fund did better than others. The M total return was 10.02%, still underperforming the S&P 500. It would only cost you $61 a year for a $10,000 investment. That's because the expense ratio is only 0.58%. The fund has 53 million in net assets. The holdings include General Electric, Visa, and Moody's. It focuses on companies that dominate their markets, financials, industrials, and information technology. The advisor changed at the end of December for this fund. In July, they reduced their monthly management fee and terminated the fee waiver, effectively balancing the cost. Next, we have the Tema Neuroscience and Mental Health ETF, or MNTL. This fund had an NV total return of negative 2.98%. It has a 57.5% expense ratio, meaning it costs $74 for every 10,000 invested. It's a small fund with just under 11 million in assets. Its main holdings include Vertes Pharmaceuticals, Regeneron, and Argans. CAMSIT's focused on healthcare sector, which makes up 98.8% of the ETF. The last of the funds that had its advisor changed at the end of December. Lastly, the 10 oncology ETF called Accession had a NAV total return of negative 6.64%. The expenses are around $72 a year for a $10,000 investment. Its top holdings include AstraZeneca, Eli Lilly, and BridgeBio Pharma. The entire ETF focuses on healthcare. CAMSIT also had its investment advisor change at the end of 2024. All of the funds were reviewed by Cohen & Company, which confirmed that the reports present fairly, in all material respects, the financial numbers of each of the funds. Alright, that's the overview of Tema ETF Trust's filing for the financial year ending February 28, 2025. What are my takes on this? First, the performance across the fund families has been mixed, a few outliers, but for the most part they have underperformed the S&P 500. We have to consider that these ETFs have specific targets and strategies, so it's expected that they won't track the broader market. The high expense ratios might be a drag for some investors, especially in periods of underperformance. Also, all the funds switched their advisors at the end of last year. It might be a reorganization move. Overall, Tema ETF Trust seems to be at a crossroads. While some funds show promise, others need to demonstrate their value. There's some big challenges, but the management has taken steps to lower operating costs. That's our breakdown of the latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also join our Discord channel. Thanks for watching. See you next time.